Hello and welcome to Trading 5 Talents. In this video, I want to give my next iteration for my Iron Condor strategy, and I'm calling it the 10-2-7 Iron Condor strategy. So what I'm looking to do with this variation is I want to combine all of the previous versions that I've run, and I want to keep what works, and then I want to reduce the limitations that I've been finding over these past several weeks of my testing. All right, what you see here are the last four variations and their results. So the name column just shows you the delta value, which is the first number, the strike width, which is the middle number, and then the expiration, which is the last number. The profit per $100, the risk to reward ratio, and some of the considerations that I had found while doing these tests. So what I'd like to do is to see if we can decrease the risk to reward ratio. So we got it all the way down to 3 to 1 in the last two iterations. And then I want to look at some of these considerations and see if we can take away those disadvantages in this next version. So if you want more information about any of these strategies and what I've done, how I tested, then there is a playlist that I'll link to that you can view all of my Iron Condor tests. So what I'll be doing is I'll be entering every day. Before it was just Monday, Wednesday, Friday expirations on SPY, but recently they added the Tuesday and Thursday expirations, so I can do this every day and the testing can get done much faster. But what I'm doing is I'm going to skip the big 5 Fed events that I went through in my last video. So if you missed that video, I highly encourage you to check that out so you can see exactly which events that I'm trying to skip and not hold trades during, as well as how I'm finding out when those events actually occur. But I'm going to be skipping those events. And that's something I wasn't doing in my previous versions of the Iron Condor testing. And I always said that I was going to, or I should start doing it because I think it would definitely increase my win rate. So that's what we're going to do. The next thing is that each of these Iron Condors, which 10-2-7, so 10 delta, 2 strike wide, widths, as well as a 7 days until expiration, that goes for about 30 cents in credit per Iron Condor. So that's about $30. And I'm going to exit at 50% max profit. And I'm going to also exit for a loss at 100% of the credit. So what this does is it's going to start taking away some of that auto close risk that I was experiencing. It's also going to allow me to control my risk to reward a lot better. So I'm either going to be making 50% or I'm going to be losing 100%. So that's going to be my 2 to 1 risk to reward. And we'll break that down in just a little bit. And again, I'm calling it the 10-2-7 Iron Condor strategy. So let's look at this. So the profits are going to be around $15 per Iron Condor. And again, if I'm opening it for $30 in credit and I'm exiting at 50% of that, then I'm going to be gaining around $15 per Iron Condor. So that requires, again, because these are 2 strike wide condors, it's going to require $200 in capital, and it's going to be about a 7.5% return on capital. So that is lower than the previous iterations, but I'm also I think I'm improving the strategy overall by taking away some of the other risks that those strategies have, or limitations that those strategies have. So that's the first exit strategy, is exiting at 50% max profit. And again, what that does is it reduces that auto close risk if you're on Robinhood, also reduces assignment risk if you're on a different broker. It increases the win rate because I don't have to hold it all the way until expiration. Now, I'm not showing the diagram of this strategy because it can be a little misleading. These are 10 delta strategies, so 10 delta on either side. This is going to be an 80% chance of profit if held until expiration. But since we're exiting early, that's going to adjust that probability of a win. And I don't know exactly what that probability is, so I feel that it's going to actually increase it only because I don't have to wait until expiration, or I don't have to risk being auto closed. So I think it's going to increase the win rate. So like the previous iterations, I'm going to be entering the next Iron Condor before this one, or before the current one expires, because I'm entering them every day. They have a 7 DTE. It's going to require more capital, but I think the strategy is definitely worth trying. The other way I'm going to exit is if I exit for a loss. And so in previous versions, I was waiting until the underlying hit one of the short strikes, moved up to the short call or moved down to the short put. But that that was like a 7-to-1 risk to reward or a 6-to-1 risk to reward. By exiting earlier for a loss, then obviously we're going to be able to reduce that risk to reward ratio. And how I'm determining what my exit price is going to be is when the Iron Condor value is 100% of the credit. So what that means is I'm going to be losing about $30 per Iron Condor in a loss scenario. So if I'm entering for $30 in credit and it moves against me, a SPY moves against me, I'm waiting until 100% of the credit is achieved, which would be $60. So basically just a doubling of whatever credit you entered. Once the value of that Iron Condor has doubled, that's when I'm going to exit. So that would be $60 in this case. So $60 I have to buy to close, but I sold to open for $30. My net loss is going to be $30. So I've highlighted those here on this image. You're either going to make $15 or you're going to lose $30, and it already has a high chance of profit. So I believe that this is going to be a much more profitable and consistent strategy, or at least variation, than the previous ones. So is it actually better? Well, I'm testing that out now, and the results should be coming out soon. But the advantages that I see is that really there's still a high natural chance of profit. Natural meaning if you let it go until expiration. I think the short strikes are wide enough to increase that profit range, but because we're exiting early, I think we can increase it even more. I'm avoiding all the binary events that I mentioned were causing me a lot of grief in the previous iterations. I've outlined what those events were in my last video, and those are the events that I'm going to be avoiding during this testing phase. I'm also exiting early to reduce the auto close risk, and I think that's also going to increase the win rate. Now, one thing I do want to mention, I was also trying to exit early in some of my previous iterations, but because the initial credit was so small, exiting for, let's say, 75% of the max profit went, well into 1 DTE or 0 DTE, and I was just holding those condors for too long. So by exiting at 50% with a higher premium, that's why I go 2 strikes wide, I think I'll be able to exit maybe after 3 or 4 days and not have to hold them as long, and maybe turn some profit just a little bit more quickly. So this is a better risk to reward ratio iteration, 2-to-1 rather than a 3-to-1 or a 6-to-1 or a 7-to-1. 2-to-1 is much more manageable. So again, the disadvantages are going to be the commissions if you're paying commissions. I'm on Robinhood. We don't pay commissions there, so that's not an issue for me, but I know other traders are on different platforms and they do pay commissions. This is a 4-leg strategy, and if you're exiting early, you're going to pay to enter and you're going to pay to exit. So that open and close commission rate could really eat into your profits, as well as if you want to scale this strategy up. You're going to be paying double commissions if you're doubling, or triple commissions, or whatever. So that's a real big disadvantage for these Iron Condor strategies if you're running them, with larger scales. Another disadvantage is, again, because these are all overlapping, it just requires more capital. You just want to make sure you have enough to continually run these. And ideally, what I'm wanting to do is running them every day and then pretty much closing them, or closing one every day, so that I consistently get that income rolling in. Now, of course, you're going to be skipping the binary event, so there's going to be a gap in some of your profit harvesting. But ideally, that's what I want to do, is just be able to have this continual, consistent profit that's coming in from these trades. So like I said, I'm testing this. I'm almost done with it. I've avoided a few binary events, and I'll show you what those are. So be sure to click on subscribe and turn on the notifications so you can get those results. And if you have any questions about this strategy or this variation, then go ahead and leave a comment down below, and I'll try to get back to you as soon as possible. Until next time, trade wisely and take care.